Feds are powwowing tomorrow. The expectation going to go up for the second time. 3/4 of a point increase going to be put into place in an attempt to slow the impending inflation and out of control expenses for the nation. Let's get Eric Peterson in on the case from Young Voices. He joins us now. Eric, welcome in.
Good morning. Thank you so much for having me.
Talk about Young Voices. What the heck is that? What is that all about?
Yeah, Young Voices is a 501c3 nonprofit dedicated to helping young people with a pro-freedom mindset do excellent radio interviews like this and get their work published in outlets throughout the nation.
So, give an example of somebody, a young voice out there, and kind of what their creed and philosophy is.
Yeah, so the organization overall is just sort of pro-freedom. So you have people writing on issues regarding consumer freedom, tech freedom, economic freedom. Places like the Wall Street Journal, National Review, Washington Examiner, lots of local papers, and of course, doing lots of excellent radio interviews.
Where's the best way to find it for somebody?
They can go to youngvoices.org, where they will see a stable of really smart young writers and all of their work published right there.
All right, prediction for tomorrow. What you say is going to be the result of their big powwow tomorrow?
Yeah, I mean, I think it's pretty much baked in that you're going to see 75 basis points increase. If you see 100 basis points increase, I think that would be a little bit of a surprise. I don't think it'll have that big of an impact on the market. That increase is sort of already baked in, so the announcement probably won't cause things to shift real much, but I think that the GDP numbers absolutely could. I think everybody is under the impression that we are in a recession. If it turns out that GDP just shrank by probably less than 1%, I think the market will feel pretty good about that. If you get a really big number, over 2%, I think folks might be far more worried, over that than an increase in the interest rate.
So maybe the walls don't tumble after tomorrow, but heading into we'll say by the end of the year. Where do you think? I mean, a lot of the experts are talking about going north of 3%. What say you? How far north of 3% are you expecting, and would that be a game changer?
Yeah, I would say the real question is the Fed going to have conviction if the market decreases or the job market starts to lose a lot of the slack that they have? One of the things that Powell tried to do a few years ago was cut back and raise rates to try to get some sort of normalcy back into the market. And so a big dip, and they freaked out and went back to their loose money supply. The question will be, does the Fed feel like they have the political cover that they need to host a contractionary monetary policy to really get inflation under control?
So what would you do? I mean, if you were able to kind of wear the Big Daddy pants and wear the hat for the day, how would you kind of shift things around?
Yeah, I mean, I think what they need to do is give a lot of stability, make it very clear to the market that tackling inflation is their number one problem, continue to apply pressure, continue to raise interest rates in a very predictable fashion for a period of time until inflation gets under control. And, of course, that's only half of the equation right now. A lot of this is on the supply side, whether it's energy prices and the fact that we're not producing enough energy in this country and still relying on countries like Saudi Arabia to bring in oil, and the fact that we're still very reliant on countries like China for our supply chain, and the fact that COVID has not gone away and COVID zero continues to be a large policy over there. So the inflation that we're feeling now is really a dual problem of supply chain issues and the fact that the Fed has had an expansionary monetary policy for just far too long.
What openings and, say, opportunities can one take advantage of in a scenario like this where people are starting to tighten up a little bit, but if somebody has a little bit, something to play with, where could they go?
Yeah, obviously you might see housing prices finally take a dip. A lot of folks expected housing prices to dip during COVID. Instead, we saw the exact opposite, right? People were leveraging up because there's a lot of cheap money moving through the economy. They bought a lot of houses for a really high prices. So the chances of housing prices coming down is definitely up there. And, of course, bond rates are high as they've been a long time. Something like I-bonds right now are going to be paying out something like 9.5%. Just 3-month Treasury bonds are going to be paying something like 3%, very possibly in the near future. A lot of that money is risk-free. So, the more expensive it is to borrow money from people, the more money you can make if you have some money that people need to borrow out.
I was reading an article, and they were talking about liquid cash on hand and something that you didn't want to have a lot of. What say you? You say that's a kind of a wasted investment there, or it's kind of a healthy safeguard?
Yeah, certainly having some cash on hand for emergencies is always important. But again, the way that Treasury yields are paying out right now, holding too much cash on hand, you're going to be losing a lot of value right now just due to inflation, right? If you're saying 9% inflation, that means every dollar you're holding is losing 9 cents. Year over year, and things like bonds are a good hedge against that. As you feel that other asset classes like buying a house or putting the money in the market is just too risky for where you want to be right now.
You a fan of the TIPS, the Treasury inflation protected securities?
Yeah, obviously they've been a pretty unappealing investment for a long period of time, right? Yeah. Paying back to 2 to 3%. But, for your kind of average everyday American that might just be holding a few $1,000s, your opportunity to at least sort of just protect the cash on hand that you have, it becomes a really attractive vehicle for a lot of people. You're never going to get rich off of it, but protecting your purchasing power in a time of really high inflation is important to millions of Americans out there.
We've kind of had an ongoing theme discussion here on the show here, talking about offset inflation ideas. Anything that you got that you think might be a little creative as far as ways to kind of safeguard yourself?
In terms of safeguarding your personal finances, it's not really what I talk about a whole lot. But again, I would say if you have cash on hand, right, your ability to buy bonds to just sort of protect yourself, that you're gonna get your investment back at the end of the day, and just holding on to that purchasing power value is going to be incredibly important through a tough economic time that we're going through right now. And it's something that you can do directly on treasurydirect.gov, or just stop by your local bank. Bonds have been really unappealing for a long period of time, but I think right now they're appealing to a lot of Americans dealing with uncertainty.
Eric Peterson, Young Voices, appreciate the time.
Yeah, thank you so much for having me. Have a great day.
Continued success, and of course you can check that out online. Young Voices, the esteemed Eric Peterson.